Welcome to TradeTheNBI.com. This Jones report is for the 10th of December. More excitement here. Well, I've had to reboot TradeStation over and over again. That's a whole different story. We won't even get into that one. But from a daily standpoint, look at this. We had the steel rising, which we expected. We were concerned that we were going to reach that point where new fund money coming in at around the 4th of the month would start to run out. And we got to that point where we were just about to get steel crossing over cyan, and it couldn't quite get there and began to reverse the other day. And now we're in the continuation of that. You still have green under red, and obviously the red DOC is flattened out. Our shakeout that it started to move up already beginning to show a lower histogram reading, so the potential of moving back down to what we expect with these little dotted lines right here, which is a match of that dip below the red line on the extreme histogram from, well, what day was that? That was right here at the start of the month. Potential of revisiting that still stronger, coupled with the fact that we had this extreme move of both the orange and the steel. It is just a question of waiting for ideally that steel coming above and then back below cyan, but that it matched it and then was rejected, and with the orange rising, we're likely to see this have a little bit more downside action. Nothing too critical, almost identical from the NQ. It was a little bit stronger. It had been before anyway because the steel had crossed above. So we're getting the exact same configuration there. And then moving on, the euro obviously going to bounce on that little bit of weakness, and you can see the crossover here of the green above cyan on very weak shakeout readings. So does that look to have any length? Probably not, but that's less critical than the fact that the elections are approaching, and if Johnson wins, then likelihood of Brexit not being a real Brexit, staying in the EU and everything maintaining itself is going to be good for the status quo. And of course, oil continuing to rise, indicating that, well, at least growth from a worldwide standpoint is not as horrible as everyone's been saying for years now, and we've been seeing the counter to that. And the reality of that has been the fact that gold has been unable to make a move whatsoever. So those broader indicators give us a clear indication of what to expect. So when we look at our 5K here, I've got the GAM function running since I just finally got this chart back up after having to do all the reboots. But you can clearly see that we had, every time we get these DOC spreads, we're now in this situation where there's been no steel reset. We had a couple of spikes above the 13.5, which led to little bounces. But as soon as you move back below that 7.5 range and get your cyan back over green, boom, you get the decay. And of course, even in this most recent one, we had that dip below the red line, tiny pop, revisited, and we're right back up to that same spot on rising red DOC. So we've got a slight move of green above cyan at this point, so the potential that this has a little bit more juice to get maybe up to that 50%. And I would be looking for a spider at that point, meaning a cyan to pop back up and green cross back below, and that would be the point to see an additional turnaround, but we're likely to come, well, at least back to the 23. We don't have any indication that we're going to make it all the way back down to the 31.16 now. Of course, these numbers are so familiar because the 31.16 is the daily that we had for an algo level, and that corresponded also, we had on the 5K 31.17, and I'll put those back on there. I'll probably put them on the Skype chat because you have the 31.09, 31.75, and then up above was the 31.1750, and then 31.33 in those, which when we hit those right up here, we just got rejected off of them. So we're just playing those same algo levers that we've had for quite some time. It's been pretty consistent with it, and I think we can expect more of that same. Now that we've passed that initial fund push, we're going to see how much more liquidity is available for them to try and buy back up this dip and take advantage of it. So we'll see if they're able to even do that. If they're not, then I would expect that we're really going to see some significant volatility to the downside. So we'll keep an eye out for that one. As always, I'll put up anything relevant on the Skype chat. Trade well.